Suppose two balance sheets are given in the beginning and at the end. You can call it as on 31st March 2010 and 31st March 2011 in a columnar form. Means two columns on asset sides and two columns on liability side. So asset side, goodwill 5,000, 4,000, debtors 6,000, 5,000, furniture 5,000, 15,000, total 16,000, 24,000. Liability side, capital 10,000, 15,000, profit and loss count 6,000, 9,000, total 16,000, 24,000. And additional information, shares were issued for rupees 5,000 during the year. So one thing is clear, this balance sheet belongs to a joint stock company, not a firm, because the firm cannot issue shares. So if the shares have been issued in this organization, it means it is joint stock company. Anyhow, it doesn't affect us whether this is the balance sheet of firm or joint stock company, because our accounting treatment for the cash flow statement is the same. So we'll start taking all the items one by one. Shares issued. First of all, take the additional information. Shares issued rupees 5,000. So let's prepare the capital account. Buy balance BD 10,000. To balance CD 15,000. When you share the issued, one thing more, here capital means share capital. So you can say buy bank rupees 5,000, because this is the fresh capital. This is the plus item and it is always written down on the credit side. So the total is 15,000. It means 5,000 shares have been issued. This is the inflow. Now goodwill 5,000 and 4,000. You better prepare a goodwill account. You know, goodwill is an asset. So on debit side, to balance BD 5,000. On credit side, buy balance CD 4,000. Now the thing is, where is the goodwill of rupees 1,000? Last year it was 5,000. Now it is 4,000. There is no depreciation on goodwill account. This is intangible asset. And one thing more, you can't sell the intangible assets if your business is going on. Then what happened to this goodwill? Where is rupees 1,000? It means it has been written off. If you write off the goodwill account, it means you have to sacrifice the profits of the year. So on credit side, we'll write down by profit and loss count. In the inner column, written off rupees 1,000. So total on both sides, rupees 5,000. So if you imagine the profit and loss count of this company, you will find that there must be one item on the debit side of profit and loss count, that is to goodwill written off rupees 1,000. Now debtors 6,000, now it is 5,000. It means the debtors are reduced. These are the current assets. I have already explained you the changes in the current assets and liabilities will be required at the time of calculating cash from operation. I have already told you that current assets and cash from operation, they have got the inverse relationship. I mean to say opposite relationship. Always be aware about this thing, that current assets and cash from operation, they have got the inverse opposite relationship. What it means? If there is increase in the current asset, it will be deducted from the net profit for the purpose of calculation of cash from operation. If there is decrease in the current assets, that will be added to the net profit. So what I do, for the convenience of my question, in my working notes I'll make T and heading is current assets. On left hand side plus items and on credit side minus items. Because there is decrease in the debtors in the current asset, it will be added to net profit. So on plus side I'm going to write down decrease in debtors 1,000 rupees. I will require it at the time of calculation of cash from operation. Furniture 5,000, 15,000. I strongly suggest you to prepare the furniture account. So to balance BD 5,000 by balance CD 15,000. So the credit side, the total is 15,000. Now on debit side, one item is missing for 10,000. There are two possibilities. Stronger possibility is that furniture must have been purchased. So to cash, in the bracket you can write down purchased rupees 10,000. It means furniture has been purchased for rupees 10,000. So capital account I have already prepared. Profit and loss account 6,000 to 9,000. It means there was net profit of rupees 3,000. Okay, let me prepare the cash flow statement. But before that, I have to calculate cash from operation. You know, when we calculate the cash from operation, first of all, we have to write down net profit. Net profit was 3,000. Because in this company, previous accumulated profit was 6,000. Now the accumulated profit is 9,000. It means this company has made a profit of rupees 3,000. So net profit 3,000 plus goodwill written off, because this is the non-cash item. We have to add back. So the total is 4,000. This is the profit before the treatment of current assets and liabilities, and it is also called funds from operation. So from net profit, we have reached funds from operation. Now what we have to do? We have to add or deduct the items of current assets and liability side. I have already made one rough account, one rough statement for the current assets and liabilities. On plus side, I have already written down decrease in debtors 1,000. So I am going to add it plus decrease in debtors 1,000. So 4,000 plus 1,000, that is equal to 5,000. This is called cash from operation. In the last episodes, when I start doing the proper question, then I will tell you how to present this cash from operation in a more professional manner. At this moment, I am trying to make the concepts clear to you. So I am not writing down all the figures in a perfect way. Anyhow, we have got the cash from operation rupees 5,000. Now let's prepare cash flow statement, inflows and outflows. Opening cash on inflows 0, closing cash on outflow side 0. Then on inflow side, fresh capital, or you can say issue of shares rupees 5,000, because the company has received 5,000 from the public on account of capital. Cash from operation 5,000, total 10,000. On outflow side, furniture purchased 10,000, total 10,000. So this is the cash flow statement.